So I'm here with David Knapp, who is Chief Energy Economist at Energy Intelligence. Welcome, David.
Thank you, Alex.
Thanks for joining us. So we just listened to a really interesting panel, a trading panel, and traders who are in the market today have voiced some pretty strong views on the future price of oil. What are your views on this subject?
Well, I think it was very nice for the panel that I'll be chairing tomorrow on oil market conditions to have a view from people that are in the market every day, from three very large trading companies that Marcel van Poppe chaired. What came through very strongly is that it was a very split view when they were asked what they thought the price of oil was going to be at this time next year, at the next Oil and Money, that three of them were all at $60, and one of them was at $45, Ian Taylor. Why the big difference? And I think that's one of our tasks tomorrow. First of all, to say what my three speakers and me think about the direction and the level of oil prices, but also our rationale versus the thinking of what the traders were telling us today. I think what they were seeing was that conditions seem to be getting better with regard to OPEC discipline, that it looked like there was some tightness maybe starting that was a preamble to a significant possible decline in the level of oil supply because of the lack of investment that happened after the price decline of 2014. My view, personally, is that Saudi Arabia will be probably very interested in avoiding that kind of decline, and that's where the oil will come from. But I'm also an optimist about oil shale, and I think the traders were thinking that we're getting late in the game with shale, and I think my speakers are going to probably disagree with that.
Well, on that exact topic, I mean, so you are moderating a panel on oil markets. What more do you expect to come out of the panel?
Well, I think they'll see a bit more of the macro picture. Rather than just straight supply and demand, we'll be looking at the geopolitical situation and maybe more importantly, the degree of leverage that geopolitics, and we have a session about to come up on that, the amount of leverage that has on oil prices, which can ebb and flow week by week, day by day. And I think we're thinking that we'll be getting a set of mixed news, in particular about what goes on in the U.S. shale patch. And the reason for that is that the people that are now out there are increasingly the bigger players. That big oil, the natural holder of big oil for unconventional oil is now they've come together. That big oil is the right people to be there was a conclusion of a panel that's going on right now. And I agree with that. We called it the economic Darwinism in the shale patch. And so some of the money that was spent very rapidly to support the independents who didn't perform as well as they might have is now being taken over by the big oil companies, Chevron and Exxon being the two sort of prominent players in the U.S. unconventional space now.
Okay, thank you. And just finally, I mean, we're coming to the end of day 2 of Oil and Money already. What has your main takeaway been from the conference so far?
Well, I think that the first day, being about natural gas, everybody I've talked to has been very impressed with not only the performance and the information flow from that day, but the fact that we had done it, that gas is on the way up. We're oil and money, but we're not blind, and we can see that gas really matters. And they are also, as co-products, you can't talk about company finance and just talk about one of the two fuels, because they happen together and companies work with them together. So I'm happy about that. And also as Chief Energy Economist, I'm not just an oil guy, or I'm not supposed to be. I have been for quite a while. But I need to worry about renewables. I need to worry about gas. And I'm starting to try to take a more active role in that within the company.
Great. Thank you so much, Dave.
Thank you.